Good morning, ladies and gentlemen. Once again, this is Sarah Shifal. Welcome to CxO TV, where innovation meets ideas for growth via our knowledge sharing platform, CxO Global Forum. Joining us today, Mr. Samier Khan, Managing Director, APAC, Codebase Technologies. Samir Khan brings a total of 29 years experience in bringing technology, consulting solutions, enterprise products, and services to banking, insurance, and fintech companies. With 20 years based in Singapore and working across Thailand, Australia, Japan, and many more. Very good morning, Mr. Samir. How are you today?
Good morning, Sarah. Pleasure to be here. I'm very well. How are you?
I'm good. Thank you very much to be a part of our show and taking out your valuable time for us.
Thank you for having me here. It's indeed a pleasure to be on the show.
You're more than welcome, always. So, Mr. Sumi, in your position as code-based technologies MD for APAC, what's your view on the trend of better, faster, and more innovative payment solutions in Asia?
Right. That's a very deep question. Let me put it in perspective from a few viewpoints. The first viewpoint would be what is really happening in the payment space in Asia Pacific before the pandemic hit us, and this is pre sometime around 2019. People or institutions had already embarked on a journey of modernizing payments. So there were two aspects of payments really that people were focusing on, or the industry per se was focusing on. One was real-time payments, and when you talk about real-time payments, I think the agenda was really to ensure that domestic payments were, that was the first milestone to actually get the real-time payments going live from a domestic payments perspective. And in many countries in Asia Pacific, I'm based in Singapore, so at least here in Singapore, we saw that go live much before COVID came upon us. And in other countries as well, a very large example of that would be in India, where they embarked on a UPI journey, the Unified Payment Initiative, and the one in China, where real-time payments were happening within country. The focus then moved and still continues to be still prevalent today from a cross-border real-time payments, and that's a challenge which now is something that the industry is seeking to solve. There are some initiatives that I can talk about, but more so from a post-COVID, when COVID really hit us, I guess. The thought process and the focus for institutions really became in terms of how do we really provide access. Yes, there are fintechs. Yes, there's mobile banking available. Yes, there's a lot of penetration of mobile phones, telcos having access, or a large populace having devices made available to them. How do we leverage, or how do we really solve this problem of making payments accessible? So that became an agenda in the early part of 2020. Across 2020, in the time of the pandemic, I guess, a lot of action has taken place in Asia Pacific. Two real large milestones which have been kind of uncovering themselves. One has been just before the Singapore Central Bank and the Malaysia Central Bank, before their conversation, the MAS spoke to the Reserve Bank of India, the corresponding entity in India, and the mandate now is as of course we've seen, COVID has been accelerating a lot of innovation, but also to ensure that payments really happen in real-time cross-border. So that mandate, I guess the two regulators are working very closely. They've embarked upon a journey where by the end of 2022, you would be able to transfer money in real time, but also not only in terms of real time realization of funds. Also, in domestically, you can use peer-to-peer transfer, so you can transfer money over a phone. So you have you can do that over a phone in Singapore, or you can do that on a VPA, which is your virtual address, a payment address. And you could use a national identity. So both the countries have successfully used societal platforms, public platforms, government platforms in order to achieve unique identity to make payments possible. Also to put up the payments infrastructure in order to achieve the quicker, faster. The intermediaries completely removed. And I think with that initiative and a similar such initiative, which MAS has been talking with Bank Negara in Malaysia, the impact of these two conversations and of course the go live of both these projects are going to be around the end of 2022, but which will open up a huge amount of transactions, between Singapore and Malaysia, because we also import a lot of goods and services from Malaysia. That means that there would be a lot of settlement, there'd be a lot of payments done from merchants as well. So that's a huge economic impact, in terms of payments, really, that solves that issue. And between India and Singapore, what I know is that it's about $1 billion US worth of transactions per year. And that's a large number, and that to be availed from merchants, from remittance, from a perspective of any kind of money transfer that you look at, that's a really large milestone which would be achieved, and a significant success there. I guess what we will see to make this better, faster, real time, of course, does that. But I think from an innovation perspective, we'll also see things like alternate payments, different ways of making payments. At Codebase, we do have something that we allow retail customers or users, banks users, to transfer money using any social media platform. So you don't have to open your mobile banking application or reach into your mobile wallet and transfer funds or get access to funds. All you need to do is within that platform, while you're conversing with anybody, let's say on WhatsApp, you can actually use your WhatsApp keyboard. It's not a WhatsApp keyboard, but the keyboard there, or which you're using to, text your friend or a counterparty, so to speak. You can actually make payments, and that's where innovation is really coming out. Different ways to make payments accessible to a common person. Institutions are focused on that. So that's really where the trends are, I think, from an APAC perspective.
Right. The best part
Yeah.
is the national ID cards. That is going to be the best. You will have
Yes,
only one card, and you can make, your payments, your transport payments, and anything. That's
exactly.
wonderful.
So,
I hope that
anything and everything. I mean, the model has been around unique identity, and the thought process was that phone numbers can be one, and you should be able to make payments using phone to phone model of making payments. But I think these national IDs that are being set up in different countries in South Asia, as well as Southeast Asia, sorry.
maybe they are more secure, the national IDs.
Well, yes, I guess, the aspect of payments also predominantly lies with the fact that you need to do a KYC, right? You want to, from an AML fraud perspective, phone numbers can also be bought. What cannot be availed by an individual would be the unique identity or the national identity that you would get. Well, there are checks and balances for phone numbers to be unique and you to be registered. You can't get a mobile number that easily in countries now. You need to have some form of identity to prove that you are who you are to get a number, and that number gets latched onto your national identity. But in absence of that, to make it really easy, if the country has put in place a national identity database, then it's just an API call away. I mean, to integrate it, just to get the information out, and that makes it secure. I guess, from an open banking perspective, and I love to talk about this topic of open banking so much because it really has put into place because it's identifiable right now, because it's recognized there is an initiative around open banking. Just the thought process brings in governance. And if one doesn't have governance, then it does become difficult to monitor. Is my thought process? Yeah, is what I think. Yeah.
Right.
Yeah.
So, Mr. Sumit, demand for fintech solutions is stronger than ever. Do you think that
Yeah.
2022 is the key year for fresh innovation?
Oh, yes, very much. I think uh, what we did see between 2020 and 2021 was predominantly to, fintechs came out. A lot of fintechs didn't come out really at that time, and they've been all along there. But they got focused because they made a lot of things available. They started addressing key areas around access, availability, payments, identity as well. And those 2 years remarkably were to sort of look at where those problem areas are and define solutions that address those problem areas. I think as we've started to live, I'm not sure whether COVID will go away as early as we think it will, but if we've started to live with this, with this pandemic, then it gets us to take a step back and really look at what new innovations we can bring. And I think from that perspective, there are a few few trends that I see that will capture a lot of interest from many different perspectives, from a market perspective, one, from a regulator perspective, two, clearly from the sense of technology and fintechs, and from financial institutions as well. And this is the acceleration per se because of the pandemic has also encouraged regulators in different countries to fast track their process of allowing for digital banks to launch their services. So we did see that while Hong Kong came into play some time back, and then Philippines at the same time in the early of 2020, Singapore gave out some licenses, and we now see that Malaysia is also going to do the same in the early next year. It's also warranted for two things: for traditional banks to relook at how they're offering services, to relook the cost of the services, and to really be in the space, not necessary to compete with the digital banks, because they have a different value proposition. In my mind, it's very clear. And what I'd like to share with the audience is that digital banks are not here to compete with the traditional banks. But they're there to solve different problems that traditional banks inherently has not been able to solve. For example, we still talk about financial inclusion, which banks have been around for so many years, but that problem has not been solved. There's still a lot of unbanked, underbanked people, and therefore, so coming back, while regulators have taken the stance of fast tracking, traditional banks have looked inside and looked at how they can scale up to maybe compete with digital banks, or maybe start to offer services that they can, and relook at the price of offering that service and see whether it makes business sense for the bank to embark on those kind of services that digital banks are willing to offer. So in that, I think you will see of course, you would have heard words like CBDC, which is your central bank digital currency.
Right.
You would have heard of, probably carbon credits and so on. But I think in my mind, the real place a real area where we're seeing a lot of, and there's going to be a lot of talk about this, is predominantly in the buy now, pay later space. So the BNPL space really is where there is a lot of action, because BNPL necessarily is not competing with your lending or your cards marketplace. Though at this moment, you speak to a banker, and the sentiment is that it is kind of giving Visa and Master and credit cards a run for the money, probably because they don't charge any interest. But it's a very different product. It's not positioned as a replacement to credit cards. It is a product that helps people to make purchases, of course, on a credit basis, but the ticket sizes or the value of those purchases are relatively small. Now, there is no comprehensive solution there out there today in the market from a tech services provider. We do have one. Since our Codebase, works on the model of having its core processes, product processes, as well as a whole API factory. So we have about 477 APIs out there that can really do everything. I mean, can build a complete bank, for an institution. And our target is to, by the end of this year, to have about 900 APIs carefully selected over different functions of the bank to make sure that, a bank or an institution can really scale up and offer certain services that they could not, because that would involve a lot of change, rip and replace potentially, and even if not rip and replace, a lot of product integration, which makes it a lengthier exercise, a large cost, and therefore that was the deterrent, right? So BNPL is something which I feel will really scale up. Even if you look at the sentiment in the marketplace, the common man is really not ready to take a lot of debt today. But if there's something that comes to the person made available at no interest, at a price point which is just a one-time price point, that makes it extremely compelling to avail that product at that point of time. Yes, there are both schools of thought that BNPL will force people to make purchases that they don't need. And that's always a sentiment, right? When cards came about or lending came about, you end up spending where you don't need to. But put it this way, the audience that can avail these services from an institution clearly would be able to, or let's look at the statistics. I think the default ratio is nearly, if you look at Klarna and some of these apps that actually do your end-to-end BNPL, irrespective of the bank that you bank with or the merchant that you're availing, that product, or you're at the POS point, meaning it could be an e-commerce site or it could be a store. They from their data, I see that it's only a 2% default as against a close to 26% on cards alone, on credit alone. So that makes for an interesting thought process that this will be a big phenomenon for this coming year. Yeah,
let's see what coming years will bring to us. Because, of course, it's going to be a lot of change.
It is, yes, very much. Very much so.
So, what has been the role fintechs have played in helping people during and after the strict lockdown?
Oh, very much. I cannot. I often think about the Spanish flu. The time when a similar influenza took over the world, right? So I think it was a 1-2 year or 3 year period where the world really shut down, like how it has pretty much now. The difference is really that you're locked at home, and now more than half the population of the world is looking at self-imposed kind of lockdown for themselves. They're not going out willingly. While of course the government has put into place restrictions about movement, about not more than 2 or maybe 5, depending upon the region, how many people can aggregate together or come together. How many people can visit homes, and all that is being controlled by government policy. But I think this is also self-imposed by people who, self-imposed isolation, where people just don't want to go out, right? So they don't want to put themselves at a risk. Now, just imagine that if you needed to stay at home and you didn't have technology to support your needs, like, your basic needs of eating and probably being entertained to some level. Yes, there is internet, But how much will your internet really solve any problem for you? I mean, probably it'll keep you entertained for some time, but everything else, good content comes at a price. So I think the role fintechs, how fintechs have really made it easier is I today, personally can't imagine not having an app to get my food delivered, not having if I need something I can get groceries delivered at my doorstep. I don't really have to step out to do anything that otherwise without fintechs it was not a possibility, because I had to carry my card someplace. Yes, there was technology where I wouldn't touch a terminal, or I wouldn't touch, my touch would get reduced. Still, I would probably have to punch in some numbers and I could,
True.
probably clean my hands thereafter. But if things were not made so easy to order online, to shop online, even to buy content online, it would be really difficult. And fintechs have really made it far, far more easy to self-isolate. So, really, to answer your question, without, I mean, that's a huge amount of help that the fintechs have given to the world. Really, one can actually be at home, so without feeling being punished or imprisonated or something
Right.
like that. Yeah. So, so the fintechs really have done a good job there.
Right. And I think that when it comes to payment and something like this, may it be COVID or not, maybe next year everything is going to be fine. But these evolving payment methods that people will continue to have, I don't think so that there's going back to this. It will keep on
Oh yeah,
evolving.
very much, very much. In
Yeah.
fact, the thought process really is that many retailers, many restaurants have become kitchens now. And they're
Yes.
really no longer providing restaurant ambience and that experience of dining in. They've just become
Exactly.
kitchens, and I guess retailers have become warehouses. So, will they go back to their old business model
Exactly.
of having a retail outlet or a restaurant? Probably. Probably they would.
But I
Probably they
think
wouldn't.
most people,
But yeah, it's but does their business get impacted in any way? No, it doesn't. Today, many of these restaurants and many of the that have become kitchens, and retailers that have become warehouses, they're still doing business, probably more profitable now. And I see so many
true.
schemes being launched, discount schemes, because the middleman has gone away. The cost of running a
Yeah.
shop or cost of running a restaurant has gone away, so they can really cut down on that cost. Yes, there is supply chain that's come into the whole ecosystem where delivery needs to be done, but that's not even half the cost of running an establishment. So from that perspective, I think these rolling back to a pre-COVID time probably will not be the same as what it was. It's going to be a new, different world, and I think that it's a healthier world. I mean, in short, we've this pandemic. If you look at the brighter side, I know it's quite saddening where people have suffered loss, but
Exactly.
if you look at the positive side, I guess this has given us or helped us leapfrog, or like
Taught
a
us new way of
springboard.
living life.
Very much, very much, yeah.
Yeah.
So it has pushed us to adopt digitization. E-commerce has become
True.
I think, it's commoditized. That's the best word I can use here. You know, my mother, who probably didn't even, she's not an internet user. She does use internet today to call me on WhatsApp, but I guess she's not one of those internet users that, you and I, if we're using internet, she can't be compared to people like us. But truly, I think she's learned now how to order food online and how to get her groceries online, and that's
Wow.
that's remarkable. I mean, I never thought that she would do that, but she has learned that, and I guess that's also
Everything is
adopting.
evolving. Yeah, exactly.
Yes, yes. So there's always a good
So
takeaway from this. Yeah.
yeah. That's very right. So, Mr. Samir, South Asia has some of the world's lowest levels of financial literacy. So, how are Asian fintech seeking to change this and increase financial inclusion?
Right. I think the world started to embark on a open API economy maybe about 3 or 4 years prior to the whole COVID phenomenon before 2020, and one of the mandates of embarking on that journey, or for want of a better word, the regulators wanted to look at open APIs and the API economy, especially to help solve certain problems, right? And one of the problems, which is at its core, has been to help for financial inclusion. Now, how do they really do that, right? I think if you look at, if you understand segments which the bank address, clearly there is a cost per person when you onboard a person into your institute or into your into your ecosystem, and they become your customers, and to maintain them as a customer, there's a cost attached to it for a financial institution. Now, this has been typically in the range of about 200 to about 400, depending upon the geography, dollars per onboard, let's put it that way. So that has that's kind of deterred many financial institutions to do two things. Either they say that, this is not our target segment, and hence they are unbanked. They can't even open an account and avail financial services. And two, specific banks with specific charters have had access or have started something to address this unbanked segment, but they've not done a very good job at it, and services have been expensive. So when I say services have been expensive, to a layperson, it's that these people cannot avail services that a regular person gets, which is access to finance, access to payments, and where they can store their money, and they know for a fact that that money will grow. So with the help of open banking and essentially APIs, and this is where innovation probably comes in a bigger picture. It's helped to bring this cost down. APIs have removed intermediaries. Just to give you an example, just to help you understand, if I wanted to get into or if an institute wanted to get into a lending business, right? What they would have to do is they would have to go to a first, probably get a license to get into that service. Or let's not even say lending. Let's say that they wanted to offer a virtual card. They'd have to actually not get a license really, but go to a bank. Speak to the bank, and the banks typically, a lot of people go to banks, a lot of businesses go to banks to tell them that this is something new that we can offer, and banks do have a lot of people visiting them, so they naturally fall into a sort of a queue, right? And then they have this application that can do a certain thing, which then has to again be integrated to the bank's core application. If they're selling virtual cards, then it has to start working with their card management system. It probably has to work with a credit scoring, a credit underwriting system. Then they would have to have separate conversations with processing companies. Then your conversation with Visa, a separate conversation with MasterCard, and therefore that whole cycle of starting that business would be extended. It would be a 1 year, 2 year exercise, and then you would have to put in people to start working, integrating both the applications and multiple applications within the bank. So from the drawing board to actually go live and offering that service, there's a huge gestation. Now with APIs, you really don't have to do much. You have, when I say that, there's still work involved. So the back-end plumbing has already been done. So you already have so to speak, an infrastructure to make anything available, should you choose to make that available, because your bank's core systems have connectors and APIs available to access, let's say, account information, initiate payments, get account information to do any assessment from if they wanted to lend, so to understand what kind of inflow is coming into that account, what's the outflow, to do their own algorithm for risk assessment, how much credit they could potentially give to the person, what's the person's how many financial accounts does he or she owns. So all that data is available through APIs and integration, and then there are public and societal platforms like the national registration, national card ID registration, and of course your credit bureau, and then you have now organizations using the power of APIs have also come about, third-party credit report providers, and therefore it makes it very easy for institutions or for banks or for fintech players to actually allow for services to the market, that's really the problem. I mean, and from that perspective, because it makes it easy, it also and the cost is reduced in that manner. I guess it allows for looking for institutions and for the fintech players to look at markets where there was a need, but now the need was not being fulfilled because the cost of running that operation was very high. Now we've managed the cost, we can look at that market and we can offer something for them. A good example here would be, if you look at Singapore, I think when you look at a country like Singapore, the only people, or I could say that when you look at a segment of the populace here, which is probably underbanked, then the first thing that comes to your mind is the migrant worker community, right? These are people who are coming from South Asia, from economically, not very strong countries like Myanmar, Yes. So they come in, as workers, as labor here, and they don't have. They do have an identity, but that's all they have. They don't have a credit score. They don't have. So what are the services that and then the cost? The salary packages are so low, and most of the time they were being given salaries by cash, right? So that was the old school, right? Now with COVID, at least in Singapore, the one of the banks here, one of the largest banks in Singapore, has made it, and they worked with Ministry of Manpower to make sure that each migrant worker would be onboarded digitally onto the bank, and hence they put in systems in place where the cost was curtailed. And they also look at it, probably as a corporate, social responsibility to get them or get that segment onboarded. But truly, if you look at it, that has become possible, while they are onboarded, we looked at it from a very different perspective. What we did was that they do stay in dormitories in Singapore, and they had very limited access to, or they were not mobile banking savvy, which means that for them to actually go and take a look at their account, to actually enter details and to navigate through that whole process of using the mobile app, was not everybody was very good at it. Maybe you could look at 24% that was savvy enough to actually do transactions. Hence, even if you provided those services, it was difficult. They were not being consumed. They were not being used. We put in place, the same application that I spoke of earlier, Social Pay, DigiBank Social Pay, which actually allows you, it has a minimal learning curve. The usability is, a child could learn. It's just like, kids playing with iPads and so on. That's the kind of usability and that's the kind of, learnability that it requires, which makes it easy for them to just stay on one platform, speaking to their spouses or their parents back home on WhatsApp, and, transferring money immediately. So remittance is made possible without actually going to a remittance company or their kiosk or their shop and withdraw funds, take cash to them, and say that this is what I want to transfer, and then there's a cost attached to that. So we've made it possible through applications and through technology to make remittance completely very simple. As you're having a conversation with somebody, and it's platform independent. So yes, so there has been innovation around providing these services, making these, like I said, access. So making these services available to the unbanked people. I think buy now, pay later, which we are solutioning around there, and we propose this. We propose this with a lot of institutions, but the fact being that we tell banks that you don't have to really worry about other fintech lenders to be, you don't need to worry about them offering a BNPL service. You as a bank having a set number of clients can offer BNPL irrespective of whether they hold as long as they have an account with you, you can offer that service to them at the POS as well. So be it e-commerce site or be it something else, right? So I guess that's where innovation and that's where the inclusion really helps. I think alternate payments is I guess another phenomenon that I'm seeing in Asia Pacific is that while people are applying for digital banking licenses, in a case in point would be in Malaysia, there were 29 applicants, 29 consortiums that actually applied for a digital banking license. Now, Malaysia, the regulators will probably give 5 in a phased manner. Probably they'll give 3 and then another 2 later. But essentially, not all 29 will get the license. So what do they really do? Do they? Many of them would probably move out and say that they don't want to be in financial services, or their director would change. But if they wanted the piece of action in the financial services space, what they would really want to do is look at options is what they can really do. Now, having a wallet really is at least till today, at this moment, there's no regulation. It's not governed by regulators. So what you could do is, it does the same thing. It stores value as a bank does, allows you to make payments, which also a bank does. What it probably does not do is lend money to you. But there are wallet companies today that have started to offer small micro loans. Yeah. So at some time it'll have to come under regulation, of course. But and so I say that from wallets is going to be another area where we'll see a lot of new wallets, customized wallets, specific wallets coming up, retail wallets coming up, fashion wallets coming up, dining wallets coming up specifically for a purpose of meeting a segment in the market. So yeah, there's so much of innovation that I'm seeing coming about this year and the next year as well.
So, Mr. Samier, I believe that our viewers have much knowledge about what's going on in the world and especially in Asia side, and hopefully in Pakistan, we have such advanced solutions about the payments, because in Pakistan we have not much payment solutions yet. So, lastly,
Right.
I would like to ask what utility you see being a member of CxO Global Forum.
Sorry.
What utility you see being a member of CxO Global Forum? What do you say about this forum?
As part of this forum, it's important. Okay, I guess when you did share that in Pakistan specifically, I think there are still challenges around access to payments, access to accounts, and if you look at it. Okay, if you look at it from a geography perspective, the way the construct of Pakistan as a nation is, as a country is, it's not as complex as, and I'm not comparing the countries, but I'm bringing Indonesia in perspective only because Indonesia is a country which is very hard to address from a geography perspective. It is a country full of islands, and therefore it becomes difficult to
Exactly.
lay out infrastructure right now. in Pakistan, I think from the nation perspective, the infrastructure is there. I guess telephone or mobile penetration is also extremely high. Although there are smartphones is everybody using smartphones to its full capacity? Probably even in Japan you wouldn't see that. Even in South Korea you wouldn't see that, or China you wouldn't see a full capacity use of it, right? But what's the level? Can you do basic services? Yes, I think everybody has a data plan. Everybody uses social media, and if we can marry the concept of social media and financial technologies. If we can make that data available and that data is already available with telcos. I guess if we can make that available in an intelligent way to try to understand how do we solve these problems, it then embarks that question of it. It just gets us thinking that how we can really do that. Now, being part of CxO and having this opportunity to talk to you, I think to me it's important because I've always wanted, part of being after working in this industry for a long time, you don't want to just see, in the earlier phases, you want to see the bank or an institution move and ride up the value chain of technology. You're proud of a blockchain based implementation or artificial intelligence and so on. But, I think my purpose has I've started looking at things differently now, and I've started looking at things that not only, yes, I've worked with several banks. I've had the honor of working with about 84 banks and seeing them transform in this region. And what that means to me is I'm happy, and I'm now I don't want to see any more transformation at the bank level. What I really want to see is what can the bank do, and how can I help as a technology service provider to reach out to the masses, to reach out to people in Pakistan and get them to avail services that they couldn't. We did something with Dubai Islamic Bank, where we launched it was a really exciting project. I think I haven't seen the likes of it anywhere else. We helped them launch something called as Roshan Digital. Essentially, any Pakistani national anywhere in the world does not have to go back to Pakistan to open an account. They can actually open an account wherever they are in the world. So this makes it very easy because, you tell me how many countries can you, there are countries where you can do that, but not all countries allow for that. And to come back to your question, I think to be a part of this forum, and to constantly engage and share these thoughts, in my mind will invoke certain conversations, certain thought processes, and probably certain invitations to come and really talk about how we can look at getting this technology out there to serve a bigger purpose, where citizens of the country can say that yes, we are doing well technologically. From a technology perspective, extremely capable talent, but are we consuming that talent within the country? Are we using that talent? Probably we can do better, and that's where we need to learn from China, where China is by as a country, it's probably the large consumer of technology as much as it writes technology and gives it away. And you look at other countries where they build that stack or build that capability to provide services to another nation. I think if we become good consumers of the technology that we build, then we become a very very smart country, so to speak. That's probably one of the best uses of my time, to be here and to let the audience know that they can always, reach out and seek certain thought processes, certain catalysts there. Yeah. So yeah, really, really glad to be a part of this and share my thoughts.
Thank you very much, Mr. Samier, for your valuable time and such piece of information we got today. And I hope that our viewers will really look into it, who are relevant to that, and hope to see you soon one more time again. very
it'll be a
soon.
pleasure to
Inshallah.
come back again, Sarah. Yeah, looking forward to it with more knowledge, with more data, and hopefully
True.
change. Get you guys to help propagate that message of change. Yeah. Thank you
Much
for having me,
appreciated.
Sarah.
Thank you very much.
Pleasure.
Thank you very much.
Yes.
Goodbye.
Yeah.